Hello and welcome to Weekend Investing Daily Bytes. We are shooting episode 283. Today is 16th of September, and what a fall the market had. In the last few days and sessions, we were quite hopeful that the market would have crossed that trend line convincingly and would go higher. But it seems that the market is an animal which is designed to surprise you day after day, and there was a huge fall in the markets today, and we'll talk about that. The topic for the day today is, can you wait for this long? And we'll take some examples where marquee companies can set you back for years together in terms of your growth in that particular investment, and whether you can hold on for that long before giving up, and what really goes on in a mind of a long-term investor and how we can reduce that pain somehow. We'll talk all about that. But first, I'll look at the market. As I said, Nifty closing down 2%. It was down even more during the day. Real estate stocks really coming off, minus 3.7%. IT getting butchered every day, minus 3.7% on that as well. 7% down now IT in last 1 week, 11% down in 1 month, and 26.5% down in financial 23 now. So IT has been the major blip in the entire market this financial year, along with pharma at minus 9% and metals at minus 4.5%. Real estate, which was doing well so far, also has given up all the gains for the financial year and is up 20% only on a 3-month basis. So this entire leg from 15,000 odd to 18,000 seems to be halted for now, and the market will have to make a fresh attempt at crossing that trend line and crossing 18,000 again. We've not really been able to stand above 18,000 so far. All the talks of decoupling and all those things really came to a naught, and the mother market still rules all the markets. That is the fact of life. US dollar index is again at 110 or somewhere near that, and that is causing all the stress in the world, where money is moving away from risk into defensive zones. So in terms of overall indices, you can see Nifty Next 50 getting hit the most, which is Nifty Next 50 is also slightly higher beta than Nifty. The next 50 stocks are of higher beta, and the index also swings more wildly, minus 2.9%. But compared to Nifty Next 50, mid and small cap index and small cap did not do so badly, minus 2.4 and minus 2.3% there. CNX 200 also down minus 2%, CNX 500 down minus 2%, and Nifty also down about 2%. In terms of weekend investing strategies, all strategies down between 1.5 to 2.8%. Those which are more higher beta oriented, MIATH2 fell more, MIATH also down 1.5%, NNF10 also down 2.75%. So everything down, top 10 minus 1.8%, pretty much in line with Nifty, and the only sort of least hit strategy was MI50, which is a small case and mid cap strategy. Long term, of course, it does very well, but in the short term, everything has got bashed in today's session. And you can see on the heat map, everything is red except the pocket of IndusInd Bank. Either there is some news or some results expectations which is causing a exceptional green day for IndusInd Bank, and it is also on the charts about to break out. So maybe there is some exceptional item that is happening there. But other than that, just look at the mayhem. Wipro is down 3%, TCS Infosys down 3 to 4%, HDFC Bank 2%, State Bank 1.8%, HDFC also 2.25%. Mahindra and Mahindra, the auto sectors, which was standing very strongly, took the first round of major profit booking, with Mahindra and Mahindra down 3.6%, Tata Motors down 3.3%, Titan 1.6%, Aisha Motors also 2.02%. Ultra Semco and Grasim also taking a big hit, minus 4.5 and minus 3.5. So where we have seen recent profits, we have seen a major correction. Where we have seen major weakness in general trend, there also we are seeing a major correction. So it's essentially the entire spectrum of Nifty stocks extremely weak. But then the froth had built up in the last many sessions and some of it has come off. Even in this scenario, there were stocks that were going up. So Karur Vysya up 6.7%, IWML up 6.5%, Sumitomo up 6.3%, Bharat Dynamics extremely bullish move today, plus 6%, Easy Trip after many days up plus 6%. So these were the top gainers. Top losers were Timken minus 7.6%, Vedanta down minus 7% after this huge run up in the last 2 days, where company confirming or clarifying that the new chip factory is not coming within Vedanta Limited. It is going to be held in the holding company of Vedanta Limited. So no gains come to Vedanta Limited for that activity. MRF, a huge drop on very large volumes at minus 7%. This share is huge. I don't know why they don't split this. 93,000 rupees now. Not easy for any smaller investors to come in. India Bull Housing minus 7% and LG Equipment also extremely bullish momentum share today down. As we were talking about this trend line, you can see that the trend line that's been holding the market down since October of last year, and where we have made 2 attempts to cross, has failed yet again. I should have also drawn the 200 DMA, and we are probably below the 200 DMA also after today's fall. I think it was somewhere close to 17,600 if I'm not mistaken. So not a good sight from a chart perspective, but then we fell from the August high and made another bid within a week or two. So I mean that can happen always, not a problem as such. Today we are going to talk about the Adobe story. So Adobe, you all know, I mean we all use Adobe products, Adobe Reader and all other graphics products that they have. A lot of design companies use this product, and this is a major IT product company in the US, globally extremely well respected, well followed. This stock had gone from 100 odd rupees few years back to almost 700 in October 21. After which the entire Nasdaq started to fall, and you can see that from 700 it has today fallen to 309, a drop of nearly 60 odd percent in just a matter of a year. And this is one of the top most respected bunch of Nasdaq technology companies, extremely valuable in terms of the services and the products that they provide. But what will a long-term investor do? I mean, if somebody has come in after, let's say May 19, I mean, after seeing that their stock has went almost 3 times from there, it has come back to a naught. I mean, it will probably rise again someday. That is for sure, because these beautiful companies will make these kind of moves and will rise. But the question is, how many people can sustain this kind of pain? Maybe if it starts to go up to 400, 450, a lot of people may get out. So psychologically, it is extremely difficult to bear this kind of volatility unless you are extremely, you come in with a high gumption that no, I will not sell Adobe for the next 10 years, come what may. And that can also be extremely disastrous just in case the companies go through some disruption of some kind. So from a fundamental perspective, of which I am no expert, after dropping 60%, it is still trading at 30 times multiple. So you can imagine what multiple it had reached at 700 rupees. But 30 multiple is also extremely rich. Even for a technology company of this stature, 30 times is still very, very rich. I think most other technology companies of large size are much below this multiple. But this is a product company and probably it gets a higher multiple for that. But we've seen this story repeat in Netflix and many other stocks. So this is extremely worrisome that if somebody is invested and they have no exit plan at any point, and that usually creates most of the trouble for a lot of investors. And you can see here, the last 20 years of data for Adobe, the stock was hovering between 20 and 50 rupees for almost a decade before it started from this 20-30 rupees and went to 700. So it has gone up 25x in the last decade or so. So, I mean, nothing can match that kind of run. But why do we want to wait to give up so much of it? I mean, maybe we can do some strategy where we don't have to go through so much pain, even if we make less money. Now, if we see this 20-year chart or 25-year chart that we have here, maybe it can retrace down even to 200. We don't know. I mean, this is a falling knife right now. The parabola has been broken and it's a falling knife. So the pain is huge, and I feel really bad for investors who are holding this. In terms of the path for long-term investors, either there are only two ways. See, either you have a strategy of exit. Exit could be based on either a flat percentage drop, some indicator, 200 DMA, some ATR based calculation, some RSI based calculation, some rate of change over last 12 months. There could be X number of framework that you can build for exits, but you may get several trades in that. You may not be able to, maybe you got out here, got in again here, maybe you got out here, got in again here, so on and so forth. So there may not be a continuous run. So that is a disadvantage if you see from the perspective of long-term holder. But a long-term holder also should consider that this is a disruptive world that we live in. So who knows? I mean, in the next 10 years, whether some other company will provide better services at a lower rate, or better services at even higher rates. So nothing can be said about any company regarding disruption today. So hence, a strategy, a plan of adding, of reducing, of exiting, of position sizing, of allocating within your portfolio is very, very important. One more thought for the day. A lot of people feeling missed out because they don't have the skill to make the crores of rupees that option traders seem to be making every day. So please don't feel left out. There are many ways of making money in the market. Some are slower, more sure methods. Others are faster methods with much higher risk, much higher capital involvement, and a possibility of a blow up at some point also. So you have to suit and choose those strategies which will suit your personality, and not because your friend is doing that, or not because you saw somebody on Twitter who's doing that you need to do it and copy their style. So the analogy that I mentioned on Twitter today was, if by eating slowly you will achieve satisfaction, why do you want to eat your meal so quickly? It will only cause you stomach cramps. So same way in making money, what is the rush that you want to make all the money this week only by taking huge bets, by taking crazily sized positions? It will come gradually, slowly, dheere dheere. Just stay on the right path. You should know what you're doing. That's all. I mean, you create your framework of investing and just keep on going along that path. You don't need to do anything else. If somebody is running past you, let them run. What is the problem? You keep walking your pace. You will achieve your destination for sure. Sticking with strength. This is the chart of Tata Elxsi over the last 2.5 years, and the blue line is the CNX IT. You can see CNX IT has gained 138%, whereas Tata Elxsi has gained 1,503%. So there is something different about the stock right now, or at least for the last 2 years. So identifying strengths within a sector is very important. So the first cut could be that you are identifying that IT sector is doing well. I am obviously not talking about the current situation, it was in the past. And then identifying within IT sector which are the stocks which are showing relative strength, which are doing better than other stocks within the IT sector. And that's how you will pick the strengths within the sector. And once the sector itself weakens like it has now in IT, then of course either you can get out of all IT, or then compare your current holdings in IT stocks, whether they are dipping or not. Like in this case, in several strategies of ours, all other IT stocks have gone away and removed in the last couple of months except Tata Elxsi. So Tata Elxsi is something that we are still holding on in a couple of strategies because it is not yet complying with the overall weakness in the CNX IT sector. So the absolute strength or the relative strength of Tata Elxsi versus its peers is causing us to stay with it for now at least. And just see this comparison of the last 11 years, Tata Elxsi versus the Nifty IT. And I showed you that Nifty IT has done as well as Nasdaq in the last 10 years, even in dollar terms. So Nifty IT actually has done extremely well. It is up 338%. But Tata Elxsi is up 8,463%. So that is the cream that you get by staying with the strength in the market. Don't get blown away with the narrative that IT stocks are going down, so let me sell all my IT stocks. Be aware of what your stock is doing versus others, and what that sector is doing versus others, and then you may be able to take the right decisions from a momentum perspective. And then of course if you are doing fundamental and all other kinds of discretionary systems, that is another story altogether. So please share this video with your friends. I'll definitely share mine with my friend who works in Adobe, and do share it with your family and your friends who can make use of this. Thank you. Bye.